Bloomberg's world headquarters in New York. I'm Scarlett Fu.
And I'm Tim Stenovec. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
Bitcoin is lower on the day, but higher for the early part of this new year. It is our first show of 2026 as Morgan Stanley joins the crypto bandwagon with new ETF filings.
In just a moment, we're going to be speaking with Monica Long, the president of Ripple. The company made big strides last year, eventually hitting a valuation of $40 billion.
Prediction markets also saw a big boom in 2025, but recent trades on the capture of Venezuela's Nicolas Maduro raising eyebrows. A newly created Polymarket account earns one trader more than $400,000, reviving fears of insider trading.
That's all ahead on Bloomberg Crypto. First, though, a check on the markets, specifically looking at Bitcoin, as we do get 6 days into the new year. Scarlett mentioned it's lower today, but look at this. Just in the last 5 days, Bitcoin up 4.8%. Remember, last year it fell by more than 7%. It was only the fourth down year ever for Bitcoin. That not stopping Morgan Stanley filing for Bitcoin and Solana ETFs, the company's first foray into the crypto funds. The firm today submitting paperwork for a Bitcoin trust and a Solana trust, each of which would hold the individual cryptocurrencies, with the Solana product allocating a portion to be staked. Here's how those two cryptocurrencies did over the last year. You can see Solana lost about a third, a little more than a third of its value over the last year. Bitcoin down just about 7%, Scarlett.
And Tim, I'm watching Ripple's digital coin, that's XRP, and what you can see right now is that it has made a bit of a comeback in recent weeks as Ripple, the company, looks to expand its offerings. You look at XRP, it's actually back to the highest level since about mid-November. In early December, Ripple, the company, raised $500 million, attracting some big Wall Street investors, including Citadel and Fortress.
And that's exactly where I want to start, with Ripple President Monica Long. She joins us on Bloomberg Crypto this afternoon. Monica, Happy New Year. Good to see you. I just want to start with that $500 million share sale back in November at a $40 billion valuation. Give us an update in the couple of months since then. What have you done with the money so far?
Thank you so much for having me. Happy New Year. So yes, we were very pleased with the fundraise in Q4. And you'd also mentioned, 2025 was a big year for Ripple for both our organic growth and then also inorganic. So we had acquired 4 companies last year with the fundraise as well. We are now focused on integrating those businesses and continuing to grow.
I wanted to get some more color on the fundraising specifically because it included this one structure, certain protections, the right for those companies that you sold shares to sell shares back to Ripple at a guaranteed price and guaranteed return and preferential treatment should a major event like a bankruptcy or sale occur. Can you give us a little more context, a little more color on why you were willing to offer those terms?
So the overall structure for the fundraise is very, very positive, very favorable for Ripple. We were really pleased to welcome Fortress and Citadel onto our cap table, in addition to a number of other crypto native premier funds. And what they really saw was that our business is working. Our strategy of creating digital asset infrastructure for businesses and financial institutions alongside the inflection point that stablecoin payments hit last year was, something that they wanted to be a part of. And as we point more toward applying these technologies to the world of capital markets, having investors like Citadel and Fortress and others are great strategic partners on that front.
Right. I hear the case for why they wanted to be part of the Ripple story, but I'm wondering in terms of the structure of the deal, offering those protections, was it necessary to get that deal done and to secure a big valuation?
To my knowledge, they were excited to be to be investors in Ripple, and we were very pleased with how the terms of the deal panned out.
Hey, Monica, one thing that's interesting about Ripple as a company is that much of the perceived value is tied up in XRP, the cryptocurrency that Ripple owns. Talk a little bit about diversification. You mentioned acquisition of late, but how are you diversifying moving forward?
So the whole strategy of our company is to create products. So the connective tissue that traditional finance needs to make blockchain and cryptocurrencies and stablecoins, all these tokenized assets, to make them actually useful and applicable in the real world. You need a host of different components, such as secure digital asset custody, compliant on and off ramps. I mean, a big part of our strategy has also been compliance first. So we've acquired a book of 70 plus licenses around the world to facilitate those flows for our customers. And so, bringing all of that together for our clients has been what we're focused on.
You said back in November, a couple months ago, that the company has, quote, no plan, no timeline for an IPO. Obviously, with these new investors and with existing investors, they're ultimately going to want to see a return on that investment. Can you give us an update on the IPO?
Currently, we still plan to remain private. Often the strategy driving an IPO is to get the access to the investors and the liquidity of the public markets. And between the strength of our balance sheet standalone, which is really what we've been able to leverage to make these acquisitions, alongside interest from strategics like Citadel and Fortress, we're in a really healthy position to continue to fund and invest in our company's growth without going public.
And part of that growth, of course, is tied to getting limited banking charters from the OCC, the Office of the Comptroller and Currency, you and other crypto companies, making what many would say is a first step towards integrating into the federal banking system. What specifically are your plans for a bank charter?
Yes. So with the passing of the Genius Act, which was monumental for the industry and for stablecoin adoption last year, not just in the US, but around the world, how we launched RLUSD, Ripple US Dollar, was under a New York DFS trust license. And so with the passing of the Genius Act, we also are, seeking the federal regulation through the OCC with this charter. And so our plans are really just to ensure that how we manage and implement our stablecoin RLUSD is to the highest regulatory standards.
Understood. Is there anything that we should expect this year in terms of new features or services now that you have been granted these limited banking charter? At the moment, just continuing to grow RLUSD alongside our payments business, integrating these new acquisitions and making those all a success is what we have in mind. And we think the OCC charter has been really well received by our industry. We have been seeking that kind of level of regulation for a long time, and so this really legitimizes what we're doing.
So you mentioned some of those acquisitions. The company has been quite acquisitive. Where do you see M&A opportunities in 2026 and even beyond? What's exciting to you right now?
Yeah, so the thrust of our M&A strategy has been to accelerate the technology development of our digital asset infrastructure. So adding components like MPC custody through Palisade, as well as strengthening our stablecoin offering with Rail. That's kind of part one of our strategy. Part two has been acquiring complementary businesses that could be users of this infrastructure. So in the case of G Treasury, they serve 1,000 corporates. Using stablecoins as a new payment mechanism to make cross-border money transfer a lot more efficient has been on the minds of corporates. And so, we now are going to be plugging in those G Treasury customers to our infrastructure. And in the case of Ripple Prime, they serve hundreds of hedge funds, and we are kind of pushing further into that space of applying blockchain and stablecoins to make collateral mobility a lot more efficient.
What about acquiring an exchange? Because some of the biggest digital asset companies that many would argue are in your space, they actually have exchanges, like Binance, for example, Coinbase, for example. Would an exchange make sense?
Exchanges are definitely key partners of ours. Those are the primary, centralized exchanges have been historically the primary venues of liquidity for crypto and digital assets. We are really excited about how decentralized exchanges have been kind of building momentum as new venues of liquidity, which that plays into one of the core strengths of the XRP ledger, a technology we use. So they've been key partners to ours. We don't have plans to seek an acquisition in that realm. But I think another interesting kind of trend we're seeing in crypto is the verticalization of the technology stack. So you mentioned Coinbase. Coinbase has now developed its own layer one base or layer two. And we're seeing that kind of across the board with the main players in crypto seeking to kind of integrate the full stack from the blockchain to the stablecoin to custody technology, on and off ramps, et cetera.
All right, good stuff. Monica Long, really appreciate your joining us and hope to catch up with you again. Ripple President Monica Long there on Bloomberg Crypto. Now, coming up on the program, we talk the meteoric rise of prediction markets with the former CFTC Director of Enforcement, Ian McGinley, will join us next. This is Bloomberg Crypto.
Prediction markets are the focus of today's Bloomberg Big Take. The story coming as we learn that a trader on Polymarket made nearly $400,000 betting on the capture of Nicolas Maduro, with the biggest trades placed just before President Trump publicly announced the military operation. This trade reviving fears around insider trading and causing one congressman to call for legislation to regulate such trades. Let's discuss the risks and rewards of these prediction markets with Ian McGinley, partner at Sidley Austin, also former CFTC Director of Enforcement. Good to have you on the program. Thanks for joining us.
Thanks for having me.
So could it be insider trading? Is that possible in a prediction market?
So it is, and the CFTC has rules against that. It's a type of insider trading known as misappropriation. And the law is actually interesting because it's somewhat of a legend within the CFTC. It's called the Eddie Murphy rule.
Okay.
And it's after the movie Trading Places, where there's insider trading on
orange juice?
Orange juice
All right,
futures.
there we go.
Right.
By the way, that's one of my favorite holiday movies.
It's a classic.
Me too. And so in 2010, that law was passed, and it prohibits specifically trading on inside information that comes from the government. So assuming someone knew it came from the government and had the requisite intent, that's not only a violation of the CFTC rules, but it could also be a crime.
So do you see something happening here with this particular trade, this particular contract? I mean, is the CFTC, and I know you're no longer there, but is this the kind of thing that the one person who is working at the CFTC, the one commissioner who's there, is going to go after?
Well, like you said, I'm not there, so it's hard to tell. But this has gotten a lot of attention, of course. It hasn't been the only incident that's gotten attention, right? There was the Nobel Peace Prize event contract recently where those odds shifted dramatically. And so when you are a regulator or a prosecutor, you pay attention to these reports. And I think what's interesting is a few things, right? Like, this is very transparent of a market. I mean, the public was involved in this right away. Mm-hmm. The trades and some of the money transfers were on the blockchain, right? So you see now how ordinary citizens online are able to trace the money and call it to the attention of the public. When I was a regulator and a prosecutor, we did pay attention to these news reports, and often it would start a lead. So that would be something that you would start an investigation off, but you would not necessarily, and you wouldn't make a case off of that. What you would do is then go and look for other evidence, right? So you talk to witnesses. If you're working with DOJ, you would get a search warrant for someone's email account, for their text messages, to see what's going on inside their head. What did they mean? Because a common defense in insider trading, right, in whether it's equities, crypto, prediction markets, is, no, I did a lot of research here. I've been an expert, right? So you could see someone saying that. I'm an expert in U.S.-Venezuelan relations. I've been following this closely. I noticed that the Pentagon was ordering pizzas. Remember that report that came out, which seems indicative that something might happen. And so those are the things regulators will look at.
I read the tea leaves and I made a bet based on that, or I made a decision based on that. I'd mentioned that the CFTC is a slimmed down version of what it used to be. It's supposed to be a 5-person commission, but right now there is just one person. Is that a functioning agency with one commissioner?
Well, we will see, but that is permitted by law, it seems. When the current chairman testified at his confirmation hearing, he said it would be a good thing to have other voices. and the push-pull, which helps to make good policy. And I think that's right. But also keep in mind there's a large staff at the CFTC in the hundreds, very skilled group of folks who know these markets very well, and they are very capable.
If you look at Polymarket's front page right now, it's clear you can bet on a range of things, including who the Republican and Democratic nominees for president will be in the next election cycle, things that are out of an individual's control, but also things that are within an individual's control, like Elon Musk's number of tweets between December 30th and January 6th. There's more than $25 million in volume bet on that right now as we speak. In your view, should anything be off limits, or should people be able to wager on anything?
Well, there's certainly limits. We were talking about before we started, a contract on someone's life, of course, and the CFTC does have powers under their laws to prohibit some contracts from being listed. You mentioned contracts in one individual's control. There is a lot of risk there, right? And we saw it in the analog sports betting context, right, where the allegations there, right, were that a pitcher manipulated his performance on the first pitch, whether it would be a ball or a strike, right. So those are certainly mention markets. They're very similar, right. What someone says on a particular interview or appearance, right, because one person controls that. But again, there are laws against that too. If you are manipulating the market, you can be charged under the CFTC rules.
Prediction markets, obviously a growing business, growing very, very rapidly in 2025, and more is expected in 2026. What do you see as the biggest risk for this industry?
Well, you're right. It has been a tremendous growth, and we've seen it, institutionally, retail investors, at Sidley and other law firms now, we have clients reaching out all the time about getting involved in the space. Sports is a very interesting area because there's a lot of legal nuance there. Throughout the country, state authorities have filed lawsuits against prediction markets, basically claiming that they're gambling. There have been responses by the prediction markets, and courts have taken differing approaches. One judge in Nevada actually initially ruled one way in favor of the prediction market, and now has changed in terms of his ruling. And so those cases are now, a number of them, in the appellate courts, so one step away from the Supreme Court. So we'll see what happens there and whether sports continues in prediction markets. I
think certain elements of this are really useful for us. Like I like looking at who prediction markets think the Fed chair nominee is going to be,
right,
for example. But I'm wondering, someone who's been so close to this and someone who is so close to this right now, just give us your judgment, net. Is this good for society?
Well, look, I think that's what regulators, the public, and the courts are going to decide probably this year, right? And I think if you
what does a case like that look like?
Well, I mean, in aggregate,
okay,
what type of prediction markets we want. I mean, keep in mind, prediction markets have been around for a very long time. They just have not really involved elections or sports, which is where you see.
And it hasn't been as easy to do
rapid,
from your phone to just throw money on a certain wager.
Right, rapid growth. But I think you look at retail, you look at institutional investors, they seem to be saying yes, that this should really be a part of our society going forward. And you see prediction markets almost everywhere now, right? In news, in search engines, everywhere.
They're proliferating for sure. Ian, a pleasure speaking with you. Come back soon. Ian McGinley is a former director of enforcement at the CFTC. He's currently a partner at Sidley Austin. Coming up, another big take. Real-life crypto attacks nearly doubled year over year in 2025 as the industry draws more kidnappings, violent kidnappings at that. We've got the details next. This is Bloomberg. Since 2020, there have been more than 215 documented cases of physical crypto attacks around the globe. The sum in 2025 almost double the previous years. Bloomberg's Austin Carr wrote this weekend's big take and joins us now. And Austin, rising prices certainly a catalyst for the crime, but it's really the irreversible nature of crypto transactions, the fact that there are no protections, that really struck me and has led to this surge in brutal home invasions and kidnappings.
That's correct. A lot of the sort of traditional protections we have at traditional banks, FDIC, withdrawal limits, those don't quite exist in the same way at all in the crypto industry, which is fueling a lot of these attacks because they're both irreversible and instantaneous. So I spent much of the last year sort of speaking to a lot of the victims of these crimes, including a particular crime spree over the course of 1 to 2 years that affected a half dozen victims involving physical attacks. And it's really quite horrific how some of these crimes have moved offline from hacking to really brutal sort of injuries that have occurred in person through home invasions and so on.
Yeah, I don't want to give away the whole story, and I encourage everybody to check it out on the Bloomberg terminal and at Bloomberg.com, Austin. But in the couple of minutes that we have with you, can you talk a little bit about how this gang that you studied so closely for the last year was actually able to find victims to go after?
It was really interesting. I think a lot of the coverage about these types of physical attacks is focused on sort of high-flying, unsympathetic figures. You see people showing off their Lamborghinis on TikTok and how they made all this wild money through crypto investments. What we really looked at is the victims that are sort of small-time investors and how they're increasingly becoming victims of these attacks. The gang that we looked at had sort of sourced them through things like leaks, various hacks, SIM swaps. These are sort of types of methods to access someone's account online to see what types of funds they have. And they really focused on people who had big enough sums that it made worth sort of attacking, but not too big where they might have extra security. So a lot of these attacks, they were looking at victims or targets in places like North Carolina, Texas, Florida, and a number of other states across the U.S. and also Canada as well. And they again were looking for targets that wouldn't be suspecting that they would be attacked just because they were viewing these types of investments as not so different than a 401k.
Right. I mean, people who had maybe a couple $100,000 worth of crypto. So, Austin, what kind of recourse do people have very quickly here?
There's not a lot of recourse. I mean, one of the really interesting things is that after these attacks took place, some of them did have, they got nothing back. Even in the cases of where they had a lawsuit against someone that might have leaked their information, they all settled out of court, leading to not much sort of money coming back. But again, for the type of crimes that they sort of suffered, I'm talking about people who, and forgive the listeners here, but they had forks stuck under their fingernails, or they were held at gunpoint. Really disturbing stuff, and there has not been a lot of sort of insurance coverage like there is in traditional.
Austin, I encourage everybody to check it out. That's Bloomberg's Austin Carr, and that is going to do it for Bloomberg Crypto. See you same time next week.